Hello friends, welcome to Market Analyzers. This is news video number 44. Today Nifty fell by 33 points and closed at 19,731, whereas Bank Nifty fell by 577 points and closed at 43,583. If we compare Nifty's fall with Bank Nifty's fall, Bank Nifty fell more than Nifty. In fact, Bank Nifty fell by 1.3%. I will explain the reason for Bank's fall in later part of the video. Before talking about that, from past 1 week, I could not upload videos, but some important scenarios developed globally, which is very important for market participants to understand. Even in previous videos also, I told that on 14th November, USA inflation data will be updated around 6 p.m. in Indian time, which will impact our markets opening on 15th November. First, I will explain about inflation data and what market expectations were. Then let's try to understand its impact on global and Indian markets. USA inflation for October month came at 3.2%, which was 3.7% in September. Inflation slowed down from 3.7% in September to 3.2% in October. The market expectations were around 3.3%. People were thinking inflation will come at 3.3%, but it came even lower at 3.2%. So it is positive because it is one of the main data on which US Federal Reserve will base their future interest rate decisions. After this inflation data update, global investment banks like Morgan Stanley and Jefferies are expecting more rate cuts by US Federal Reserve than what was expected earlier. Now the expectations are no further rate hikes and rate cut will happen by May 2024. So due to this interest rate reduction updates, the global markets are on up move. If you take US markets, Nasdaq rallied by 2.5% from 14 November till yesterday's closing, whereas Nifty rallied by 1.2% and Indian IT sector rallied by 4.7%. If interest rates in US are coming down means it is very positive for IT sector because due to low interest rates, companies may increase their spending which will boost the orders of our IT companies. And another big positive update is fall in bond yields. After this inflation data came out on 14th November, US 10-year bond yields corrected by 5.4% from then. It is a 250 basis points fall, and if we consider bond yields fall from their peak, they fell by 12%. Now 10-year bond yields are at 4.39%. It is a 12% fall in a matter of few weeks. It happens very rarely. We all know bond yields is a risk-free return guaranteed by US government. Bond yields fall will make them less attractive to investors in comparison with emerging equity markets. And crude oil is also trading below $80 per barrel mark. So these are all positive updates. Globally right now, the sentiment is positive. Before talking about charts, let's try to understand FIS fund flow before inflation data, which means before 14th November, FIS were net sellers in cash segment from past 14 trading sessions continuously, but from last 2 trading sessions, they are net buyers. They bought 550 crores worth on 15th November and 957 crores yesterday. In F&O also, their data looking good. In options, there was not much activity. It is very negligible. In futures, FIS bought 1500 crores worth in Nifty futures. Even their index short positions also reduced from 1,51,000 contracts to 1,27,000 contracts in a period of 1 week. So short covering from FIS is clearly taking place. Short covering means earlier they took short positions. It means bearish positions with the view of markets fall. Now the market is going against their view. They should in some point cover their existing short positions. Earlier they sold. Now to cover these positions, they should buy, which will move markets even higher. This is what short covering means. I hope you have understood the background which is moving the markets. Now let's analyze charts and see what it is trying to tell us. From past 3 trading sessions, Nifty is moving upside and it closed above 19,620 level. If you remember, in previous videos, I told only above 19,820 daily closing, I will be a bullish on Nifty. Yesterday, Nifty went and traded above 19,820 for 30 minutes. Closing happened below 19,820 level. I have explained importance of that level in previous videos. For now, it is still wait and watch for me. I want closing above 19,820 to confidently carry bullish view, but I am not definitely bearish either. If we talk about Nifty levels, 19,680 is support. Even today's opening candle took support and rallied exactly from that level. Below that 19,620. Resistance is at 19,820. Now let's talk about option chain range. The range which I gave earlier was 18,800 to 19,700, but yesterday the range was broken on upside. This range was given on 26th October, so we had this range intact for a long time. Now the new range I am taking is 19,400 to 20,100. It means I am expecting Nifty to stay in this range till this monthly expiry. Nifty might even break this range, but the probability of Nifty going beyond this range is lower according to my observations. I will explain why I have taken this range. Now Nifty is at 19,730. and downside my level is 19,400. It means Nifty won't go below 19,400 in this monthly expiry is what I think. If you look at charts, 19,490 is an important support level. You can look at price activity as well. There is resistance and supports as well. Even in recent rally, price faced resistance there. So if Nifty again comes downside means this level should act as support. And if you look at option chain range, this is monthly expiry, 19,500 level as highest put writings. Option chain should be viewed in seller's point of view. 70,000 puts are being sold means put seller view is bullish. 19,500 level might act as support because this level has highest put ratings. 19,500 as option chain support, 19,490 which is 10 points away from 19,500. It has price action support level and 48-day exponential moving average is present at 19,480. So all these 3 points are very close to each other and with their confluence they are increasing the importance of that level. But I said 19,400 because we should not get trapped in fake breakouts. Sometimes the price might come near 19,500 and it might close below 19,500 and next candle immediately might move upwards. So to avoid such fake breakouts, I am moving even away from 19,500 to 19,480 zone, giving the markets buffer up to 19,400. If markets closes below 19,400 in 50 minutes time frame means I will exit both of my positions. This is the reason for downside range of 19,400 and upside 20,100 is because 20,000 is a psychological mark. Ratings at such level will always be higher. In fact, 20,000 mark has highest call ratings close to 70,000 and price action resistance is also present at 20,040 level. It is not a very important price action level, but price has respected this level earlier. I gave some buffer and went till 20,100 and surprisingly 20,100 mark also has very good ratings. Our range is 19,400 to 20,100. Now let's talk about important stocks news updates. Today Bank Nifty fell by 1.3%, but Nifty did not fall in such quantum. You might have already know the reason. It is due to RBI update, but I will try to explain the update by RBI in a easily understandable way. First, look at this picture on screen. It shows the growth of unsecured loans. In this quarter, unsecured loans grew by 28%. It includes personal loans and other loans which don't have any collaterals like EMIs. There is a high growth in unsecured personal loans and credit cards. Now, according to RBI circular, all consumer credit excluding home, vehicle, gold and education loan will see an increase in risk weight to 125% from 100%. It means now RBI has increased risk weight for banks. It will impact their capital adequacy ratio. I'll give you an example so that you can understand clearly. If you haven't understood till now, unsecured loans are growing. RBI wants to reduce this growth. They have increased risk weight from 100 to 125%. Banks should maintain a certain capital adequacy ratio. It is a rule and they should maintain it. Now let's say a bank wants to maintain a capital adequacy ratio of 20% for unsecured personal loans. It means if a bank is extending rupees 100 as a loan means they should keep 20 rupees separately as a sort of safety. Now 100 rupees loan, 20 rupees should be kept aside. Now the capital adequacy ratio comes at 20%. As RBI increased risk weight from 100 to 125%, now the same 100 rupees will be counted as 125 rupees and the bank should need to keep additional 5 rupees to that 20 rupees to maintain the same capital adequacy ratio of 20%. Due to this update, if a bank wants to give a loan means they require higher capital and to get same amount of profit, they need to increase the interest rates for the borrowers. The RBI has taken this measure to curb any excessive lending towards a specific segment of unsecured credit. I hope you have understood this topic clearly. Now let's talk about JSW infrastructure. They have planned to develop a greenfield port for rupees 4,119 crores at Keni in Karnataka. Greenfield port means the development of the port will happen from scratch. This will be built on a public-private partnership basis. The company received a letter of award from Government of Karnataka. This port will have an initial capacity of 30 metric ton per annum. Now let's talk about Tata Technologies IPO. This will be the first company from Tata Group to float an IPO in nearly 2 decades. Last IPO from Tata Group was TCS, which came in 2004. Today, TCS is one of the biggest companies in India. Through this IPO, they will raise 3,042 crores. The price band is fixed at 475 to 500 rupees per share. It will be open for public on November 22nd and closes on November 24th. So you can apply for this IPO in these dates. This is today's news video. Thank you for watching the video.